This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices nudged higher on Thursday, the first day of trade for 2025, as investors returning from holidays cautiously eyed China's economy and fuel demand following a pledge by President Xi Jinping to promote growth. Brent crude futures rose 16 cents, or 0.21%, to $74.80 a barrel by 0829 GMT after settling up 65 cents on Tuesday, the last trading day for 2024. U.S. West Texas Intermediate crude futures gained 16 cents, or 0.22%, to $71.88 a barrel after closing 73 cents higher in the previous session. China's Xi said on Tuesday in his New Year's address that the country would implement more proactive policies to promote growth in 2025.
Singapore onshore fuel oil storage volumes dropped slightly from the previous week but remained well above 20 million barrels amid strong inflows from Russia and the United Arab Emirates, official data showed on Thursday. Residue inventories were at 20.96 million barrels, 3.30 million tons, in the week to January 1st, dipping 4% from last week, data from Enterprise Singapore showed. Stockpiles have retreated from a multi-year high seen 2 weeks ago, but remained above 2024's average inventory level of 19.7 million barrels a week, calculations based on the data showed.
Moving on to the top news in the energy sector.
Top oil exporter Saudi Arabia may raise crude prices for Asian buyers in February for the first time in 3 months, tracking gains in Middle East benchmark prices last month, traders said on Thursday. The February official selling price, OSP, for flagship Arab Light may rise by 20 to 50 cents a barrel after falling to a 4-year low in the previous month, a Reuters survey of 6 sources at Asian refineries said. The OSPs for other grades, Arab Extra Light, Arab Medium and Arab Heavy, are expected to increase at least 30 cents, they added.
Uganda will launch its third petroleum exploration licensing round in the fiscal year starting July and has picked a winner for a tender to redevelop a large copper mine in the country's west, its Energy and Minerals Minister said on Thursday. In a briefing, Energy and Mineral Development Minister Ruth Nankabirwa said Uganda had opened up new areas and planned to conduct the third licensing round for new oil and gas exploration licenses in the 2025-2026, July to June, fiscal year. Uganda discovered crude oil in the Albertine Graben Basin near the border with the Democratic Republic of Congo nearly 2 decades ago, but production has been delayed and is now projected to start this year. Next, we have the top news in metal markets. China's iron ore imports are likely to hit a new high in 2025 as traders stockpile cheap ore for the world's top consumer despite a protracted property crisis continuing to weigh on Chinese steel demand, traders and analysts said. The country's imports of the key steelmaking ingredient will likely rise by between 10 million and 40 million metric tons to up to 1.27 billion tons this year, up from what forecasters expect to be record volumes in 2024, 7 analysts and 2 traders said in a Reuters survey. Iron ore prices are expected to fall to between $75 and $120 a ton in 2025, the survey showed, versus $88 to $144 a ton in 2024, according to data from consultancy Steelhome.
Gold prices rose on Thursday, buoyed by volatility in equities and fresh positioning, while the U.S. Federal Reserve's interest rate outlook remained in focus ahead of trade tariffs proposed by President-elect Donald Trump. Spot gold rose 0.7% to $2,641.64 an ounce by 11:40 GMT, having gained 0.7% on the last trading day of 2024. U.S. gold futures gained 0.5% to $2,654.30. In 2024, the Fed's rate easing cycle, robust central bank purchases and mounting geopolitical tensions propelled bullion to multiple record highs and a 27% annual gain, its biggest since 2010.
We will now look at the top news in the agricultural sector.
Indonesia has yet to implement a higher mandatory blend of biodiesel planned for January 1st as industry participants await technical details of the new regulation, causing confusion among palm oil traders. The government had pledged to mandate a 40% mix of palm oil-based fuel in biodiesel from January 1st, known as B40, from a 35% blend currently in force. The benchmark palm oil contract for March delivery on the Bursa Malaysia Derivatives Exchange closed 2.5% lower on Thursday at 4,336 ringgit, $968.72, a metric ton amid uncertainty about B40 implementation, after rising about 1.8% earlier in the day when it tracked gains in barley and vegetable oil.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.